For the moment, as we look at the markets very close to their to setting a new all-time high, well, it's green all over, 0.25% higher, no matter which index you pick. In that backdrop, let's welcome our market master, Dipen Sheth, Head Institutional Research at HDFC Securities. Good morning, Dipen. Maybe you're going to stay on with us and help us celebrate the new high. It's only about 12 points away. But what does it feel? Is it shopping time at all? It's taking so long, it's struggling so much to get past that number.
Yeah, but look at what's been happening if you look at it from a 6-month perspective. Zoom out a little bit, Lata. For the last 6 months, the technicals guys, us fundamentalists, if you will, have been saying, let's get a little cautious. There are trade wars coming up, oil is going up, this is an election year, the monsoon is playing funny games, and what have you, you are at a fresh high. So it's very clear the market is climbing a wall of worry. We'll keep disbelieving and it'll keep going up for a while, and then we'll all get sucked into it. Is that what's going to happen? Or is this some kind of a multi-year again breakout which will take us to fresh highs and a new bull market will begin? So that's the debate right now. And it's a very, very slippery time. Even as the result season has kind of come into its middle phase.
So which camp do you belong to? You stated two possibilities, but
yes.
which camp are you in?
So I'll give you the convenient answer because I don't have a clue about the short term. The convenient answer is the one for the long term, and that is that we are clearly one of the best economies to be in at a global level. You might see emerging markets selling off, but then we have structural strengths which many of the emerging markets don't have. You might see, a change in government. Let me make a reckless statement. And yet there are so many things in our favor that it's not that investors are going to run away if the ruling dispensation changes. Howsoever funny or disbelievable coalition alternative might look. Not that I want one. So I think if you are a long-term investor, if you are
it's a good place.
It's a very, very good place. It's one of those places which just can't go wrong over the next 5 years.
You know, we are distracting people from your conversation because it's only 2-3 points away from 11,171. But you know, it could take another 10 minutes to get there. It could take half an hour to get there. And the Sensex also went to 37,000 for your information. I know these are minor. Now it's got there
these
again.
These are just milestones. The road is unending, Lata.
No, I agree. Usain Bolt is always a pleasure to watch. Yet when he braces the tape, it's a great moment.
Yes.
For the moment, it's a great moment. Okay, I take your point that there's no denying that there is a longer-term story in India. But right now, you know, when you look at the result season, see good results from Asian Paints, it fell off. Good results from Jubilant Food, it fell off. These are all stocks which really rallied, marquee performance.
Right.
So, you know, would you buy consumption?
Yes. Selectively, though.
So, which one?
So, you know, before we take the names, let me outline what's happening. This result season is the time of reckoning for those that have rallied very heavily and whether you want to remain invested there. If you go back to Jubilant, for example, a year or year and a half ago, they were in deep trouble. And they've more than doubled from there. I don't know whether it's doubled in 2 years or a year and a half or something. Maybe it's even lesser. The point is when Pratik Pota took over, their now not so new CEO, it was in all kinds of trouble, and all kinds of theories were being floated about why this cannot be whether we'll keep on eating pizzas and that's not possible. The competitive forces are there, the unicorns are going to threaten Domino's and so on and so forth. And look at the brilliant CEO-led turnaround, as it were. And he's fixed almost everything that needs to be fixed. Close down loss-making stores, focus on the product, focus on delivery.
Okay, we are at a record high. I'm sorry to interrupt you. But you know, this is a big moment for us, right? I know it was flirting with that level for a very, very long time. And finally, Lata, it hit that record high.
Yeah, it did hit, though you may now squabble about 1 and 2 points. But it did hit 11,171, 172 almost. And then it's around that level. 37,000 on the Nifty on the Sensex as well. So record set on both the major indices. You know, now it's actually shying away considerably from there. So it does look like there is kind of a fear of heights or jitters on a big day for the Nifty and the Sensex as well. Dipen, first thoughts on the markets hitting? Does it feel like celebration, or does it feel like most people have not made money?
Yeah, so that's the other little tragedy that's played out over the last 6 months. Even within the Nifty, we are saying broad markets are kind of battered and people have, it's only the index which is giving an optical illusion. So even within the Nifty, we were just drawing out some data this morning. And I hate to sound like a party pooper at a time when, when the crackers are being burst on the Lal Street. But look at it this way. You have, if you look at the last 6 months, within the Nifty, you have only 10 stocks which have delivered, about 10 odd stocks, it could be 9 or it could be 11, which have delivered 10% or more. And you have a Bajaj Finance up there at 55, 60% kind of return. And you have more than 20 stocks which have fallen 10% or more. So look at the skew within the Nifty.
So it has been a slightly bittersweet moment. We do have a couple of more guests joining in, so let's get them on board as well. Saurabh Mukherjee and Gautam.
Okay, Dipen, do you think you should concentrate on the mid-cap space now?
So I said this, I think a couple of weeks ago on your channel that, and I know it's a broad brush comment, but I think we will have to get very, very choosy on the mid caps here on and look for quality. Just going out and buying mid caps because they are mid caps is a little bit of a junky thing to do. You have to look very, very carefully for quality. And again, I will play the same old record that if you have a high quality business with a durable business model and very strong franchise, you should buy such companies when they are in trouble. So Jubilant stands out as an example of what happened to the Domino's franchise when it went through churn. And there are other, let's say, so if you look at the broader consumption story, we have a population where a lot of, consumption is yet to penetrate. If you look at basic FMCG penetration, that's happened. But if you look at the appliances and durable space, you look at the autos space.
So does Symphony stand out because it's delivered weak numbers, but it's
terrible,
a great
not
business,
just weak.
right?
Yes, so 40% crash in standalone numbers, standalone revenues. 2 consecutive bad summers. So last year in this quarter they had posted an 18% decline. And on that weak quarter, on the base, they posted some 39-40% crack in revenues. EBITDA almost evaporated at the standalone level. And here's a company who's making foreign forays and acquiring companies in Australia. Not that it hasn't acquired something in China or Mexico and the US and so on. So, but look at the intrinsic quality of the business. The question to ask is, are air coolers going out of fashion, or is this just 2 bad summers? So were pizzas going out of fashion, or was it just some inept management before Porter took over? That's the question we need to ask. And remember, this company has been driven for over a decade by a visionary management which has gone through the ups and downs of bad summer seasons. The thing to find out right now is, are air coolers going to evaporate? Okay, from the Indian market, given the rising penetration of ACs, the rising affordability.
Yes.
And so that's a tough one to figure out right now. We've decided to place our bets on Symphony. We've been bullish for the last 30%, 40% crack, and we've gone terribly wrong. Let me stand out and say this. Okay, but if you look at the quality of the management...
So now you shift to ACs? You shift away? Or?
Not really. So it's not that we are bearish on Voltas, for example. Okay, so the thing is that if you look at the ACs and air coolers purchases on a combined basis, we are still not even halfway penetrated into the market, into the addressable market. So
you're keeping the faith in Symphony?
Absolutely. We did that for Domino's, and I dare say we might turn out to be terribly right here. We could turn out to be wrong. And
okay, so buy companies that are going through a bad phase, but structurally the business is positive.
Yeah,
what about something like an Ashok Leyland? Because there as well the situation seems to be the same.
So Leyland actually came out with very creditable numbers, and the reason they were hammered is not their numbers, but the prospects of what's so oil prices are, crude is at a high. Will we have an IIP revival at all as we move forward into an election year and beyond? So that uncertainty is there. So the mining liftoff has happened. The CV cycle turned around last year, and we've got decent growth. Ashok Leyland's mix has moved towards heavier vehicles, so the margins have become better. The balance sheet curing has happened. The capital misallocation was taken care of. The company has revived magnificently and made a lot of money for shareholders. And then it got sold into after decent numbers. So this axle load classification norms, the new axle load classification norms, and the worries on higher crude prices weighing in on CV sales began to hit the stock. Now I think this is another company which is going through some kind of a doubt phase, and there's nothing wrong in the quality of the business, there's nothing wrong in the quality of the management, and you have to make up your mind and see whether this can come back over a period of time. The new vehicle or axle load classification norms are also, remember, accompanied by an alleged promise of perhaps eliminating the rampant overloading which is happening. So you will have the same trucks going out with the same loading is the promise, except that their technical classification will be such that they cannot be called overloaded anymore. So I don't see why we should be selling lesser trucks in India just because of this. But if the overloading malpractice is not controlled, then you will have 30% overloading on 30% higher capacities. That's the worry that the market is pricing in.
What about Bajaj Auto? You persist with your faith?
So I've been reading Rajiv Bajaj's interviews over and over and over again to figure out what he's saying. And he's actually unequivocal. He's very clear on this. Again, I think this is the classic case of a great company. We are looking at, so if you look at the core return ratios of Bajaj Auto, they are better than many FMCG companies.
Oh, really?
If you strip off the cash in the books and you look at what they are making in terms of EBIT into 1 minus T by total capital employed, they are perhaps in the high 90s or in a good year over 100. So if this kind of quality of business, if we are just giving 18x or 20x to this guy and look at his product mix, look at his sales mix going all over the world, the Nigerias, the Egypts, the Bangladeshs of the world, look at the fantastic revival he's had in his three-wheeler business. And now he's saying, look, I want to drive volumes. So I will take a couple of models in my entry-level motorcycles and price them 300 rupees lower than the competition. For that, if I, if the 19.5% margin goes to 17.5 on a quarter or two, but look at the longevity of the business that you're buying into. We just get fixated on a number. Again, we are getting excited today on an index level. And it's a similar thing. Oh, if Bajaj Auto doesn't give me 19.5% margins, it's a short.
Like someone recently said that, Bajaj Auto is doing what Relgio did in the telecom space, sort of disrupting the market. But anyway, last question from my end on Havels. Very good numbers coming in. The stock has done really well, but you still see more there?
Right. So look at Havels now. It's a beautifully balanced business on discretionary consumption. Okay. You have roughly equal contribution, almost equal contribution coming across durables, lighting, cables, switchgear, and now ACs with Lloyd. And in a bad summer, when I'm struggling to defend stories like Symphony, Lloyd's actually grew. They grew 14% like to like after increasing prices. So Lloyd was an economy brand, and now it's in Havels' hands. And I think something is going to happen to this brand. If I was in Voltas, I would be seriously worrying. Okay. So and this management has over decades shown its capability at driving a very high quality. Again, return ratios are in the 40s here. They're sitting on cash. All their overseas adventures which misfired have been taken care of. Yeah. Okay, and again they are into allegedly underpenetrated categories. Of course, if you compare them with the FMCG types. Fair point. So there's another 10 years of growth at Havels, for Christ's sake. And they're leaders in almost everything they do.
Fair point. Thank you very much, Dipen, for joining us with your spirited conversation. I guess electricity is available all over India.
Yes, that's also making a
difference. Play that theme, and consumer durables are clearly showing the impact. Thank you very much indeed for your conversation.